BHP Billiton has been setting new production records, but investors have given it the thumbs down. While the mining giant's boasting it's headed for a 13th record year of iron ore production, its shares fell 2% to its lowest close in more than 3 years. Sue Lannon reports.
Investors are concerned about the global economy, but BHP Billiton keeps pumping out the goods, according to its latest production report.
The quarterly numbers were pretty good across most of the commodity range, particularly iron ore, and that's delivered very good numbers on a year-on-year basis. Iron ore up about 19%, thermal coal and coking coal about 2% up year-on-year.
Iron ore output increased over the 3 months to June, compared to a flat result from rival Rio Tinto.
BHP Billiton says production was robust despite the challenging environment. Iron ore output in Western Australia rose to a record for the 12th year in a row. And uranium production jumped 21% over the June quarter. It rose too over the year.
The challenges facing the uranium industry were on the agenda of business and government leaders at the Australian Uranium Conference in Fremantle. Weighing on the discussion was last year's disaster at the Fukushima nuclear plant in Japan.
We are true believers in the long-term fundamentals of uranium. However, in the short term, and maybe the short term is a bit longer than what we normally think is the short term, the tides are against us.
It's been a tough year for local uranium producers, with sliding share prices and the spot price trading at around $50 a pound.
We're convinced that uranium will have a space. It's just a question of timing and how it's financed.
There will be a supply side. It'll be how do we supply this new demand coming through. The uranium market's quite a small, closed market, so I think we're going to have to see quite some expansion in mine output.
BHP Billiton has yet to commit to an expansion of its giant uranium mine at Olympic Dam in South Australia.
It's obviously not something to invest in if the return on investment's not acceptable.
He's worried that China's slowing demand could cramp demand and hit local miners as prices for commodities like iron ore fall.
The problem is that China is really the only game in town, and that's where the focus is, and the concern, of course, is whether or not China continues to manage its economic growth.
So I think in the near term, ultimately the sentiment's going to likely remain cautious, so prices may track sideways with a bit of volatility. But over the medium term, we feel a lot more comfortable that the fundamentals will start to take over, which is still quite strong.
BHP Billiton's share price slumped 2% to $30.18, as investors worried about the dangers of riding on the miner's back.